All right. Good morning, members of the Audit Committee. Thank you for attending today's meeting. My name is Siti Nur Eliane Balkis Binti Farhan, the engagement partner from Ernst and Young PLT, which is EY Malaysia, appointed as the external auditor for of Nestlé Malaysia Berhad for the financial year ended 31st December 2024. So joining me today are members of our audit team, including our manager, our audit manager, and then senior auditors and our ethics and quality control partner. So the purpose of today's session is to present of our audit team. To present of our audit engagement acceptance, key audit risk, plan audit response, and ethical consideration. So in accordance with the international standards of international standard on account on auditing. Sorry. So I will begin by inviting our first audit senior, Ms. Shasha, to brief the committee on engagement acceptance and independence matters. So, Ms. Shasha.
Thank you, Miss Eliani. Members of the Audit Committee, our engagement acceptance procedure were conducted in compliance with ISA 210 and ISA 220 as well as the MIA bylaws on professional ethics. Based on our client acceptance checklist, we found no financial interest or personal relationship between the audit firm and Nestlé direction, although certain non-audit services were provided. These were transparently disclosed and safeguarded through partner rotation and separation of audit and non-audit teams. Nestlé Malaysia is a well-established public listed entity operating in a relatively stable FMCG industry with no history or regulatory breach or modified audit opinions. Accordingly, we assess the overall engagement risks as low to moderate and recommend acceptance of the audit engagement without conditions. I will now pass the discussion to our another audit senior, Ms. Shira, to explain our understanding of the entity and key analytical findings.
Okay, thank you. As part of our planning under ISA 350, we perform analytical procedures covering a 3-year period from 2022 to 2024. Firstly, gross profit margin declined from 31.64% in 2023 to 30.28% in 2024, indicating rising cost pressure and profitability risk. Secondly, the current ratio deteriorated consistently from 0.71 to 0.55, suggesting lightening liquidity and increased reliance on short-term liabilities. While inventory turnover improved slightly, the large volume of perishable inventory continues to present valuation and obsolescence risks. These trends, combined with a 37% drop in profit after tax, create pressure on management to meet performance expectations, increasing the risk of management override and aggressive accounting estimate, particularly in revenue, trade rebates, and asset impairment. Based on these findings, we identified 5 key audit risks which will be addressed through our audit planning strategy. With that, I would like to pass the floor to the next presenter, Ms. Atira.
Building on the analytical results, the key risks identified under ISA 240 and ISA 315 are as follows. First, revenue recognition and cut-off, given the high volume of transactions and pressure to make targets. Second, management of variety of controls, which is a presumed fraud risk in all audits. Third, inventory valuation and net value due to perishable goods and volatile raw material prices. Fourth, inaccurate approval of trade rebates involving significant judgment under IFRS 15 variable consideration. Finally, impairment of non-current assets, particularly in light of prior year payment charges and business performance in 2024. I will now invite Ms. Sasha to explain how we plan to respond to this risk.
Alright, thank you, Miss Atira. So, our audit strategy follows a risk-based approach in accordance with ISA 300 and ISA 313. Overall, maturity was set at 27.2 million ringgit Malaysia based on 5% of profit before tax, with performance maturity at 20.4 million ringgit. For revenue recognition, we will test automated sales controls, perform detailed cut-off testing around year-end, and focus on high-value and manual transactions. For management override, we will conduct journal entry testing using data analytics focused on manual, non-routine entries post a near end or outside business hours. For inventory, we will attend physical stock counts, test costing method, review aging reports and assess net realizable value for slow moving items. For trade rebates, we will apply judgmental sampling on major customers, compare rebate to revenue ratios across years, and reconcile accruals to post-year-end credit notes. For impairment of non-current assets, we will evaluate management cash flow forecasts, challenge key assumptions such as growth and discount rates, and perform sensitivity analysis on significant cash generating units. These procedures are designed to obtain sufficient and appropriate audit evidence to address the identified risks. So I now hand over the presentation to Ms. Fazana.
Thank you, Ms. Shasha. Throughout the engagement, we are committed to complying with the IESBA, Code of Ethics, and MIA by laws, particularly the principle of integrity, objectivity, professional competence, confidentiality, and professional behavior. Given the long-standing audit relationship, we recognize the risk of familiarity traits, as well as potential self-review threats arising from non-audit services. These risks are mitigated through engagement partner rotation, independent quality reviews, and audit committee oversight. Professional skepticism has been emphasized, especially when evaluation management, estimate, revenue recognition, and impairment assessment. Robust audit documentation under ISA 213 and quality management under ISA 220 ensure accountability, transparency, and compliance with professional standards. Lastly, Ms. Ilani will take over.
Okay, thank you to the team. In conclusion, our audit planning for Nestlé Malaysia Berhad addresses the key risks arising from the company operating environment and their financial performance, and also regulatory obligations. So through a structured risk-based approach, strong ethical safeguards, and also professional skepticism, we aim to deliver the high quality audit that enhance stakeholders' confidence and support sound corporate governance. So this concludes our presentation. We welcome any questions from the audit committee. So if there's no questions. That's all for our meeting today. Thank you.
Thank you.
Thank you.
Thank you, Miss.